There are so many investment strategies out there. Some are very simple, some are very complex. Today, I'm going to be explaining to you the dollar cost average investing strategy. Dollar cost averaging is a very common strategy. Most people even do it, but don't even know that they're actually performing dollar cost averaging. For me, that is the strategy of my choice. I love this strategy. I love the whole idea behind this strategy. It's very simple, very easy to implement, and everyone can do it. So as always, when I share a new topic on this channel, I go over the dictionary definition of the topic just to give you an idea of the technical analysis and the technical definition of what the topic is. And then as always, I break it down into more simpler terms and explain it in a more everyday person kind of way. So from Investopedia.com, the definition for what is dollar cost averaging is this. Dollar cost averaging is an investment strategy in which an investor divides up the total amount to be invested across periodical purchases of a target asset in an effort to reduce the impact of volatility on the overall purchase. The purchases occur regardless of the asset's price and at regular intervals. In effect, this strategy removes much of the detailed work of attempting to time the market in order to make purchases of equities at the best prices. Dollar cost averaging is also known as the constant dollar plan. So as always, these dictionary definitions of a topic are very more complex than it needs to be. In essence, dollar cost averaging is doing this, taking the set amount of money you plan on investing each month from your budget, and no matter what, investing that same amount of money each month, regardless if you hear news that the market's at an all-time high, all-time low, if it's lagging, if it's growing, you always continue to invest each month. You average into your portfolio at all times. I'm a firm believer in time in the market is better than timing the market. And I know there have been countless studies that have actually proved that theory correct. So for me, I don't want to wait around with large sums of cash waiting for a dip. Because who knows? Because as you've seen over the last 10 years, people who've been consistently waiting for a large dip of 10, 20% haven't really gotten it. I understand December 2018 was a little bit of a dip, but other than that, I believe in consistently investing each and every month, regardless of market news and how the market is performing at that specific time. Another very important aspect of this strategy, along with its simplicity that I choose to implement, is because of what it says in the definition right here. An effort to reduce the impact of volatility on the overall purchase. That is a very, very important factor that I take into consideration when choosing this strategy that I want to talk upon today. If you are saving up all your money for the entire year and have planned on making one lump sum purchase, and you decide to put all your money, so just say $5,000, $10,000 on one day, you want to make your purchase. All of a sudden, you make that purchase, and then for whatever reason, the market's down for the entire year, the next 12 months, 18 months, and so on, and you just consistently, your purchase has been losing value over time. That can be very discouraging to some people. If you're here for the long game and you have a 10, 20-year horizon, and you have a strong sense of belief in the market over the long term, then it may not bug you. But for most, it does hurt to see your investments continue to drop over and over again, and you have nothing to do about it. So if you dollar cost average, and instead of investing, we'll do round numbers here. Instead of just say you have $12,000 in a year to invest, instead of dumping all $12,000 at once, it may make you feel a little more emotionally stable, emotionally comfortable to invest $1,000 each month and just buy if the market's high, low, or whatever, and just continue to invest each month. That might make you feel more comfortable. For me, it does, because I know that I'm getting a deal no matter what. I'm either buying solid companies at a higher price, which isn't always great, but in the long term, I believe they're going to continue to go up, so it's not going to matter. And I also get to buy them at a lower price. I get to buy them at their 52-week high and low if I continue to average each month. So that's my strategy, and I'm sure if you continue following my channel in the future, each month I'm going to do a portfolio update of how I'm growing my stock portfolio. So for that, you get to see how, and I will also share my contributions each month and actually show you that I'm really using this strategy today. I have been using this strategy, and I will continue to use this strategy, and I will share with you my contributions each month, what I'm buying with those contributions, and so on. So next I'm going to move on to just a little example of dollar cost averaging, a visual for some people. Everyone learns in a different way. Some people are visual learners, so I am a visual learner. So I like to see, I found this nice picture right here to explain how dollar cost averaging works. So let me break down what the picture says. Let's say you have $6,000 to invest. You can choose to invest it all at once or regular every month intervals for 6 months. So like I said before, you either make a lump sum purchase or you spread the same amount of money out over time. So the red is going to be the lump sum purchase here. So as you can see on the left-hand side, you purchase 600 shares, the big red circle, at $10 a share. You invest all $6,000 once. And then if you look at this chart here, this is the chart of the stock or ETF or mutual fund or whatever this example holds throughout the year. Just say now, next month, you choose to invest next strategy, you choose to invest $1,000 each month. Now we're looking at the blue line and blue circles. First month, you buy 100 shares for $10. That's your first 1,000. Next month, stock goes up because the price is greater, you have to buy less shares. So now for the same $1,000, you're only buying 77 shares. Then the stock takes a dip for the next 3 months. It's actually below $10. You were able to purchase more shares for the same $1,000. So on and so forth each month. And if you look on the right-hand side, it compares the difference between the lump sum purchase and the dollar cost average strategy. You purchased 600 shares at fixed price of $10 with a lump sum, compared to at the end of the same 6 months, you now own 678 shares at an average price just below $9 if you use the dollar cost average strategy. As it says here, for the same investment amount, you have gotten more shares because it lowers your market risk by averaging the prices out. Of course, I showed you an example where the shares of the company actually went down over the next 6 months. There's an unlimited amount of examples where the lump sum purchase would have actually outperformed dollar cost averaging because over time, the shares only went up for the next 6 months, which I completely understand. But I'm showing with you kind of a more common situation because this right here on the screen is more generally what you're going to see. You might not see dips of 20% within the next 6 months, but you are just how the average movement of the stock market, how it's performed and the short-term price changes throughout history. Hopefully you will be able to get buys at a cheaper price than at your first initial amount. Again, this is no foolproof strategy because if this was the most important, best strategy there was, every single person would be investing like this. But many people still believe in the lump sum purchase. And again, I'm not a financial advisor. I'm not advising you to do anything. I'm just sharing with you my personal investment strategy, which is to dollar cost average each month. So for me, I've built my stock portfolio to a value of $30,712 as of market close yesterday. And for this, doing this at 20 years old has been phenomenal. But how have I done this? I have done this by every month since I was 18 years old, contributing a set amount of money. It does fluctuate depending on if I earn more or earn less in the month because I don't have that full stream of income yet because I'm still in university. But I have been investing a set amount of money, at least $500 a month, each and every month, no matter what. I've been working my part-time jobs. I have no parents giving me money. All this money is my own personal money that I've earned through my hard work. And I've contributed this portfolio into dividend stocks in order to get that constant cash flow to reinvest into more. So for me, this $30,712 has been an outcome of my hard work, and now my money is working harder and harder for me every day. So if I show you here some purchases that I have dollar cost averages into. My first large holding here, VDY, is an ETF, a high dividend yield ETF in Canada. I own 414 shares, and this was my first ever purchase, which is why it has a high market value, but it has a market value of $14,500, so just less than half my portfolio. I will not be adding to this anymore because now that I'm more comfortable investing, I choose to invest in individual stocks to not pay the management fee on ETFs. But before I was comfortable, like I recommend to other people, I invested in ETFs. So again, not a financial advisor. Pick your own ETFs or speak with a qualified individual before you go jump into the market. But I'm just sharing with you what I did. So for these $14,500, I did not make one lump sum purchase of $14,580. I actually dollar cost averages. I made a couple $1,000 purchases throughout my first couple years as I was 18, 19. I actually haven't added on to in the last 6 months, but it worked its way up to this large sum of money. So now I'm reaping the rewards of reinvested dividends and growth from this ETF that I actually dollar cost average my way into. So I've used this strategy myself, and I will continue to use it for all my other future holdings. So another holding that's actually an individual stock, which I will be doing now, only focused on individual companies, is Royal Bank of Canada right here. RBC, ticker symbol RY. I own 45 shares of RY with a market value of $4,600, actually close to $4,700. And as you can see, my total change, I'm actually down 3% on this stock, which for me is excellent, which exactly shows why dollar cost averaging works well for me. I am down on this stock. My first initial purchase of this stock was for 20 shares with a cost of around $2,000. I have been down, if I bought, and my initial purchase price was at about $106 a share. I bought close to the 52-week high. Now though, I've averaged my way in. I've made 3 more purchases into RBC since my initial lump sum purchase of $2,000. And each month, I've actually been lowering my average cost. Since I've been down, because the shares have not been around $106 since I actually made my initial purchase, I've been buying the same company, same sustainable dividend, same balance sheet for cheaper than my initial purchase because I've dollar cost average. I've actually lowered my average cost of share to around $105. And for me, that shows the beauty of this strategy. Instead of being down consistently, I've actually bought the same company for a lower price, which makes me feel better. Like I mentioned at the very beginning of this video, it's to reduce volatility. And for me, that reduced volatility makes me sleep better at night. Again, I have a long-term outlook, so that 5%, 3% drop you see there, nothing too crazy for me in the short term, but it still makes me feel very comfortable knowing that because I'm investing money each and every month, I have cash available to buy at the dips, to buy when my solid companies take a short-term price decline. For me, those short-term price declines don't matter because I average in each and every month. So I hope you learned something new. I'm actually going to wrap up my video here. Today I just explained what dollar cost averaging was, why I use it as my personal strategy. And again, if you want to use it, look into it, speak to a qualified financial advisor. I wish you the best of luck in your investments. On this channel, I'm the Gen Z investor, and I talk about personal finance, investing, budgeting, and anything to do with really money in your personal lives. Feel free to subscribe, like the video if you enjoyed it. Thanks.